morning, everybody. Good morning. I say morning. Yeah, I fell asleep there. It's my fault. We're 2 hours late, but that's fine. I had to get up early for an appointment today, so here we are, bright and early for the daily races. I will do some special TA for anyone who can tell me what that quote is from. Wow, that was a big yawn. Okay. I'm absolutely wiped out. Let's just dive right into this and record this trading new idea, because we're getting pretty close to what I want to see here. So let's do this. Well, good morning, everybody. It's important to note just exactly what we're expecting here. So let's actually draw it out, okay? Over here from the 4-hour perspective, let's point out what's actually happening. Our longest overexpanded period is the 60 period, right? If we look at our 3D wave PM, we can determine that. So when we let up our 30 distribution, our 60 distribution, that's when we'll be able to tell what the defined range for Bitcoin will be, at least until it is no longer reading above the 0.7 value. What's important to note, it's still reading above the 0.9 value. So that means it's going to be quite some time that will be trapped in this lateral range. Now, what's important to note about this lateral range is its size, okay? Look at this. We have this large bit over here and this large bit over here. That's the lateral range, okay? Now, what needs to happen is this band needs to sufficiently compress, and once that compression completes, that will actually allow price to start new expansion and new trend. Until then, we are trapped inside this blue band, okay? Now, you'll notice that price can come up, it can retest it. However, breaking outside of this band is very difficult, right? Every time price tries to break out of this band, the compression of the longest overexpanded distribution really forces price back down and back inside, right? It'd be the same scenario if price was testing the bottom edge of this band. It'd be very hard for price to break below because of this compression that we're seeing. Makes it very difficult for price to actually see any kind of sustainable trending outside of these values. Okay? So, what is our current target for Bitcoin? Right? We are expecting this range, but the 100% certainty that I like to spout off right now is price cannot resume trend until it breaks outside, or rather until it reverts exactly to the 60 moving average on this chart. Okay? Right? If we go to the 1-hour chart, we can actually see this in higher resolution, right? Because our longest overexpanded distribution in this scenario is 275, okay? Right? It's just a higher resolution reading on a shorter time frame, so it is going to be more accurate, okay? So what do we see from over here? We can see price enter the band, right? That's our condition, right? So what do we wait for next? We wait for our 27 period CCI roll down, right? Because the 10th period CCI roll actually give us an ideal entry into that trend. So every time price action re-entered this band right here, those were our short sell signals. Okay, and when those short sell signals fired, we are going to short to the relative mean. And that's the exact position I have open right now. My entire BitMEX portfolio is in a 5x short because I am just this confident on this kind of trade, right? This kind of compression succeeds around 95% of the time, okay? The chances that this trend will actually continue to the upside before reverting to the mean is slim to none, okay? I probably should have used more leverage. I'm going to say that right now. All right. So why don't we go ahead and actually load up our adaptive MA? Or rather, no, let's do this manually just to prove a point of just how rarely this kind of signal fails, okay? So we're just going to have a single band loaded up, and we're going to do this a few times just to make a point, okay? Every time we see one of these red plumes, right, that's the generation of mass. So we're going to take a moment just to look at the 3D wave PM to see how this generation of mass actually affects price. In this scenario, the longest overexpanded period was 160. Guess what happens when we change to a 160 band? Okay. When the 160 period is the longest overexpanded period, when price enters the band, it reverts exactly to the 160 mean and then trades laterally as defined by the 160 period. You can't make this shit up. Okay? Then when trend resumes, it's when we see a new bout of expansion, a new red plume, right? And we can do it for this little red plume over here too, can't we? Right? There's another mean reversion position. In this instance, longest overexpanded period was 50. Guess what happens when we load up the 50 period in this instance? Okay. When we re-enter the 50 band, price trades exactly to the 50 moving average, trades laterally as defined by the 50 band until the top of this red plume reads below the 0.7 value, at which point new expansion can begin to define a new trend. Okay? Let's do it a few more times. We have another 5 minutes in this video, right? I just really want to prove this point, why I'm so confident that this is going to be successful. Every time there's a generation of mass, this succeeds. Okay? Here, 110 period. Okay, if we load up the 110 period, what are we going to look at? When price re-enters the 110 band, price trends exactly to the 110 moving average, trades laterally as defined by the 110 band, and then new expansion defines new trend. We're going to keep doing this. Right? I'm hoping the awe factor that's going through your mind right now overpowers the repetition factor that I'm performing. Right? I've done this way too many times. You're still watching this video. Why? Well, because you're really interested on just why this happens so effectively. Okay? When we re-enter the 180 band, because our 180 band is the longest overexpanded period, price will trade laterally as defined by the 180 band and revert to the 180 moving average. As soon as that period reads below the 0.7 value by turning green, that means price can reasonably trend outside the band, right? That breaks the range. We're going to do this again. We're going to look at another prior example. And the efficiency of which you can define trend and compression is unheard of in crypto trading. I don't believe there has been anything outside of institutional black box indicators that gives you this kind of control over the market. Okay? We're going to look at the 90 period. Why? Because the 90 period is the longest overexpanded period. We're going to change this to the 90 band. Beautiful. So, when price re-enters the 90 band, price trades laterally as defined by the 190 period, reverts to the 190 MA. When, watch this, right? We're going to mouse over. As soon as this reads below the 0.7 value by turning green, right at this location, okay? Right here. As soon as that reading is below 0.7, new trend can begin. Lo and behold, we get a new trend. We're going to do this again. Right? Even for a little generation of mass like this, we can do this, right? Longest overexpanded period is 25. If we load up a 25 period band, guess what we're going to see? When we re-enter the 25 band, we will trade laterally as defined by the 25 period and revert exactly to the 25 MA. I can't make this up. Okay, we're going to do this again. Longest overexpanded period is the 60 period. We change this to a 60 period, guess what's going to happen? When we re-enter the 60 band, price will trade laterally as defined by the 60 period, revert exactly to the 60 mean before starting a new downward trend. Do you know what retail investors like to call this phenomenon? They like to call it a bear flag, right? Descending wedge. And then they feel so high and mighty for actually completing this formation, right? Look at this. This is a descending wedge. Descending triangle, excuse me, right? I don't stay privy to these things, okay? But this makes perfect sense, right? If we hide our Bollinger Bands, guess what we're looking at? It's a descending triangle, right? Where price touches down, it retests support. It has a failed impulse upward. It touches down in support. Again, it has a failed impulse upward, this time with less volume and not going as high, before another test down, and then downward break. Ooh, and then they entered their short right here when it had a downward break, right? Oh, and then, well, they failed. Why? Well, because people like to convince themselves that the market is unpredictable. They take information like bear flags and bull flags, and they say, hey, look at this clean breakout, and then it fails and moves against them. Well, that's because they're not getting the full picture. The only reason bull flags and bear flags form is to allow for the compression of short-term periods for volatility to compress so that we can restore the market to a place of potential energy. This has been a fun Dad Shark out. And I do get a little bitter talking about these things. This is a verifiable trading edge, okay? And you're on the ground floor, my friends. All right, if you're watching this, you're on the ground floor. All right, let's check how many people are actually watching this video. Hold on. So, actually, somebody said there was a wick on it. Why that wick? Trend throw a bowling ball instead of a baseball. Is he going to be able to hit it very far? No, he's not. While there is an unrealistic amount of mass, he's going to fail. That value trends beneath the 0.7 value until there's a period of compression. Once that compression happens, oh, well, then you get your trend continuation. Okay? That's the thing, guys. People have their money. They push price around. Even market makers can be wrong. Okay? Sure, you can also argue that this forced to have trend continuation. Why? Because the mean reversion condition had triggered and the period of compression had begun. Right? We can keep doing that. We can do this on every time frame. Like, even on our macro time frames, this holds true. Right? Okay, every single goddamn period in the bull run was overexpanded. So every time we re-entered its relative distribution, we would revert to its relative mean. Right? Like we have the 200 loaded up here by default, or 180. 110? Sure, 110. So we have the 110 distribution loaded up here. Okay. This is actually a really good explanation as to why trend continuation didn't immediately, just see a straight downward crash, right? Because once the compression of these periods started, we were contained in them, right? Until each relative period read below the relative 110 value to actually allow for new expansion and new trend, right? That's what's really interesting about the daily chart is all this compression that we're seeing here, right? We're trading laterally, just about as defined by every distributional period. And you can see the complete evaporation of volatility overhead across all periods, right? All this blue here, every period is compressed. That's so nice, right? And that's why we had such a major downward move recently. Guess what happens when every single wave PM period lights up and every single CCI period weights itself to the same side, right? That's net expansion. It's like 100 Mickey Mantles taking a swing at marbles, okay? He's going to hit those far. Why? Well, because you have a lot of force and not that much mass. Right? That's ideal conditions for a home run right there. Because everybody's swinging in the same direction while there's low mass to allow for sustainable and significant trending. That's what happens. So let's actually talk about what's happening on Bitcoin right now, because I really want to hammer this into you. Right, our longest overexpanded period right now is 275. Yeah, I do need to show this. If you want to use these indicators, just visit the website in the description. I can happily give you access to these indicators if you send us your shekels. So, yeah, these indicators are available for purchase. It would be a pleasure to have you along for the ride. All right, 3D Wave PM is pretty self-explanatory, which is kind of entertaining because it used to be the most complicated tool in our arsenal. But the way I've managed to boil it down just for the use in the live streams is really intuitive, right? all you have to do is identify plumes of mass and trade it. But to be honest, there's so much more information with 3D wave PM. Here's how I know it's going to be trending mean reversion instead of lateral mean reversion, because we had this period of volatility overhead evaporating into the higher periods. Then we have a new period of expansion, right? And that expansion infers trending mean reversion over lateral mean reversion, right? Write this down. I'm giving you time to get your pen, and I want to make sure I word this correctly. To determine if you're going to expect lateral mean reversion or trending mean reversion, you need to identify if the shorter-term distributional subsets are expanding from a period of low mass towards the center of its parent distributions. Okay, beautiful. That'll make sense one day. Don't worry about it. I can actually, I can give you an example, right? We got a 275 band here. And guess what we're going to look at? We're going to look at a 27 band too, because why not? Right? Also, if you actually want to learn how to use this 100%, I'm recording 6 to 7 hours of content in my series. You can purchase that for $360. I'm probably going to push it up to $440 at the end of this week as soon as I record the last lesson. Yeah, Flesh Eater over here says it's complicated but consistent. Yeah, there's nothing. Okay, conspiracy theory time. The greatest success of institutional investors was convincing the masses that trading was an easy, simple, and predictable endeavor. If you give the masses all the same default setting indicators and all the same default Fibonacci retracements, they are doing nothing but providing liquidity for themselves. If you have the masses all using the same predictable tools, well, they're going to generate predictable moves. And if you're generating predictable moves, well, that's going to result in a predictable market, or at least predictable liquidity. And if there's predictable liquidity, it's going to be much easier for you to fill your positions. Well, if you have a predictable market where it's easy to fill in your positions, you're going to have a profitable market, if and only if you're the person holding all the cards. Whew. Okay, so I have a TradingView idea open right now. Let's talk about this. Also, I'm wondering if anybody's a leech who waits until I open up this my ideas section just to see what I'm telling you to buy or sell. Because you could probably figure it out just from looking here, but you wouldn't get the full picture. Right? Let's open up this USD CAD call here. Right? We're seeing the same scenario, that same mean reversion position, and it was so effective. Right? Where we actually have the 110 period here. That's that purple band. Right? The longest overexpanded period was 110. And we were doing this condition where we're coming up to test the top edge of the band, right? Because price will trade laterally as defined by the band. So when we get that CCI roll down of its relative 11 period, guess what happens? Price wicks down exactly into the same take profit. And yeah, somebody's going to comment on this. So yes, it did touch that stop loss there. All right, why did that happen? Well, because the top edge of this band here, right? That's the slope of it. Let's actually load up USD CAD just for the explanation. Okay, yeah, this is the beauty of the strategy. So in this scenario, you'll notice, right, that this is the mean reversion condition, and it is implied that we will revert to this mean here. However, price will trade laterally as defined by the longest overexpanded period. So price can actually, because the slope of the top edge of this band is up, price can trickle along sideways, retest the top edge of the band, and then have trend continuation. That's why if we look at the USD CAD call, you'll notice right at February 11th. This trade is still active. We're still in the defined mean reversion pivots. All right. So this pivot right here, it was an excellent secondary short entry. And we plowed straight down to the bottom here. And here's something interesting to note. This was actually could have been considered new expansion. Why? Because longest over expanded period was reading below the 0.7 value as a green reading. All right, let's dive into the comments. I was still explaining Bitcoin right now. All right, let's read these backwards. Jay Constant says, so it is almost impossible to go up now. First, we need to get down in the middle line. Yeah. And I can actually draw this out pretty nicely for you. Okay. So all we were going to use here is the 275 wave PM value, right? Just so we can get the representation of it as an oscillator. Something's not right here. What did I do? Okay, 275. There we go. Come on. Son of a bitch. There he goes. Okay. So this is our mass as a metric indicator, right? Really, this is just the oscillator representation of our longest over expanded period. And I chose to load it in simply for the visual representation. So, right, we have this large plume of mass. Longest over expanded period was 275. So let's actually load up all those periods correctly, just so we can have a complete understanding of what's happening here. Beautiful. To answer your question, it is almost impossible to go up now. First, we need to get to the middle line. Yes, you are correct. So, technically speaking, price cannot continue trend as long as this blue line is above this 0.7 value, okay? So as long as we are in a place of considerable mass, we cannot start re-expanding. Think about it like this. Are you going to be able to punch a hole in a wall if your fist is only 6 inches away from the wall where you start the punch? Or are you going to have an easier time punching the wall if you've fully drawn your fist back? Right? Which one has more potential energy? I'm not saying that it's going to be impossible for you to punch that wall from 6 inches away, right? It just, chances are you're going to hurt yourself, and a lot of people are going to have the common sense not to try it, okay? So sure, maybe you'll be the exception where you can punch the hole in the wall, but why would you bet on that? It's unintuitive, right? That's what's so good about this strategy, guys. The intuition of it. It makes intuitive sense. The physics behind it work, okay? So once this blue line trends below the 0.7 value, that will be like drawing your fist all the way back, or at least sufficiently back, all right? Guess what happens if you actually, instead of, okay, below the 0.7 value is like drawing your fist all the way back. And then if you go below 0.4, that's like pretending you have a running start, right? When you actually get below the 0.4 value, that's when you really get some crazy moves, right? Because there's just so much potential energy. And you can see a great example of this on the daily chart. We'll refresh that in a second. But first, I just want to explain this, right? So technically, well, mean reversion is the condition that will most likely be met during this period of compression, right? Because think about this. As this value gets lower, the bands around price are going to tighten. And as the bands around price tighten, right? Well, the lateral range that this has to move is just going to get closer to the mean. All right, let's draw this a little bit better. So this, technically mean inversion isn't the requirement, just the compression. But as we get a tighter and tighter and tighter band with the mean right in the middle here, right, it's very improbable that we're just going to ride the top edge of this band and then continue trend, right? Because as this range gets thinner, it becomes more and more likely we're going to tag it. Right? And we actually see quite a bit of lateral mean inversion as well. Kind of the worst case scenario with this kind of trading is price just chooses to go sideways and the mean catches up with price, right? That's your losing scenario, guys. Your losing scenario is breaking even. Right? That's what's insane about this profit ratio. When you lose, you actually don't even lose. You just break even. It's like an annuity, but you always win. And actually, I do not like annuities. um, the only time where annuities outperformed the stock market was during the housing market crash in 2008. Right, for a 5-year period, annuities technically outperformed stocks. However, if you bought right at the height of the 2008 or right before the 2008 housing market crash, right? If you bought all your stocks right there and you waited 10 years, not 5, you would have outperformed those annuities. You should never own an annuity. It's the insurance company betting that you aren't going to live as long as they think you are. Never get an annuity, guys, please. Really, you can invest right before like the biggest crash or one of the biggest crashes in American history, and stock market will still outperform annuities. It is ridiculous. Okay? People think they're so attractive because, oh, there's no risk. They're so great because you never have a downside. No, it's the insurance company betting that you're going to die before you get to collect your money. You don't want that. Okay? Whew, this is a fun stream. Hi, guys. Yeah, I took a nap, and I feel absolutely refreshed, and I'm full of vigor. So, okay, back to the comments. Don Chinner says, I finally get to catch one of your live videos. Hey, thank you, brother. It's a pleasure to have you here. It's kind of interesting. I actually have a higher viewership later in the afternoon, and I did not expect that. Flesh Eater says, Kill Bill reference. That's right, man. I'm going to go over all just the actual questions, and then I'll start getting into the coins people want me to look at. Karsten Nielsen says, I've read Whistler's books, but your system is much more comprehensive and intuitive. Will we understand how to use all of your indicators and strategies after watching the 6-hour course? Yes. Yeah, that's what I do in the 6-hour course. I go over every single fundamental available, and then I tell you how to use each indicator to match that fundamental. It's very comprehensive, very intuitive, and you need no prior experience to understand it other than having a TradingView account and understanding how candles work, right? When you're in art school, you probably didn't go to art school, so this is going to be a shitty analogy for the rest of you. Don't go to art school, my friends. You need to understand the rules before you're allowed to break them, right? Well, for my strategy, that's not true. You don't need to know about Fibonacci retracements and breakout patterns and candlestick patterns, dojis, all that. It's all shit, right? Everybody knows how to identify it, and it's just the herd acting on the same information. I actually really like drawing parallels between Nietzsche's Last Man and the retail trader. It is just astonishing how similar the two groups of people are. The last man is somebody, as described by Nietzsche, who is more interested in defining their nest of comfort than finding the will to succeed. And then in their nest of comfort, they feel alone and decide to lash out as the world and become jealous of other success, right? That's the retail trader, essentially. Someone who doesn't want to work on their own skills, right? They have that deep down understanding that perhaps they don't quite have the full picture, yet they still don't choose to act upon it, right? And I guess that goes a bit into Carl Jung's theory of self-actualization and becoming what you envision yourself to be. And while we're on Jung, let's actually talk about this. He says, I'm probably going to butcher this, but it is, okay. Never attempt to lead the herd as the shepherd. Teach members of the herd that they no longer need to follow the shepherd, right? You can see that so often in this crypto space where we have all these gurus who are absolutely convinced that they have the keys to success and they can lead the herd to the greener pastures, right? And if you are constantly relying on the herd to lead you to greener, or rather, if you're constantly relying on the shepherd to lead you to greener pastures, then you're going to be helpless once he fails. And the shepherd doesn't always have your best interest at heart, right? It is all too often that the shepherd in the cryptoverse is taking those sheep to the slaughterhouse. I kid you not. I am so convinced that there are so many people who are the crypto gurus, and they actually bet against their followers, or rather just simply use their followers for the pump and dump, right? It's pretty disappointing, the stuff you see around here. Wow, our viewer retention is insane today. This might be the first time we actually break 30 viewers on a live stream on this channel, right? So, yeah, Karsten, I really recommend you buy my course. Whistler did create the foundation, and I'm absolutely certain he is smarter than me. But who knows? Maybe I found something more effective than him. Yeah, I'm actually, we used to be friends. I accidentally offended him, and now he doesn't want to talk to me. But he's actually the person, he gave me the books on this style of trading, and well, mostly because he didn't want to see me fail, right? I was using the same retail swill, and eventually, Mark Whistler looked over my shoulder and like, what the fuck are you doing? And I don't curse often on these live streams, but those are his exact words. He cursed me out for what I was doing, and he actually probably started out my fetish for asking people why things work, right? He's like, why does Fibonacci work? Huh? Do you know why it works? I gave the typical repeat of answers of, oh, it's a proven standard. Everybody else uses it. It's nature's law, all that, right? And then he just, he shakes his head and walks away. He doesn't even reply to me. Oh, no, wait. He says, yeah, he did reply to me. He said, the reason Fibonacci works is because it's very similar to the percentile deviation of the first standard deviation, right? And he just walks away and says nothing else. And then later, he just emails. He walks over one day and asks me, "What's your email?" And I give him my email, and then without even saying anything, I just find his PDFs of his books in my email. I'm like, oh, well, I'll catch the drift. Thank you, Mark. So, oh man. It's a good story. I eventually offended him though, but I think the last time we really talked is I sent him a picture of a side-by-side comparison of the .com bubble and Bitcoin, and he got a good laugh out of that. But other than that, I really want to take the time to actually show him 3 to AFPM, see what he thinks. See if I can get any recommendations out of him. But I don't know. I kind of be crashing on him. I'll be honest. Okay, back to the comments. Thank you, friends. Oh, Kai Corona's at 5 a.m. Good morning, my brother. Also, do you guys prefer the live stream at this time? Because we have more viewers than usual. Don Chinner says, I purchased the course this week and can attest that is full of great information. Now I just have to rewatch multiple times to comprehend it. Much obliged. A Cat with Dread says, this would be ironic if you didn't have your track record published. I agree 100%. Yeah. Hopefully, just oops, I didn't mean to show that call to you. Hopefully, just maybe. My trade history will at least give me some slight credibility to give me the platform of which I can say these things, criticizing the crypto gurus, right? Over 100 trades, I 10x the portfolio, right? And I still need to update the most recent month, so it's actually higher than that now. If I recall correctly, with the cutoff of around February 1st, I think it was only a 9% increase in the portfolio value this month. right? 'Cause we actually only won like a quarter of the trades, right? But here's the thing. When your profit ratio is this insane, right? My profit ratio is around 5-1 typically. Is that you don't need to win all the trades. All right, let's look at this. Yeah, this was a really long trade, but our downside was 5% and our upside was 16%. Oh, that's only 3-1, 3.5-1. That's fine. Upland Mine says worst title ever. That's fair. We also have the most viewers ever, so I guess it's not that bad. Okay. Yeah, the title is in reference to this TradingView idea. I decided to be snarky, and people took it seriously. All right. Obviously, I know nothing happens 100% of the time, but the clickbait worked, and this idea got 1,500 views. So I guess that has something to say about that. And people got really bitter on this one. I've actually gone out of my way to keep this one rather nicely updated because it's actually got a lot of traction here. And I actually just I would recommend looking at this idea. Just pop them up at TradingView and take a look at this, right? Where I point out the mean reversion condition, the actual CCI roll signal, and the actual wave PM period to follow this all through. And further updates, tags the 3.2 standard deviation for entry as well, pointing out the condition and the actual way this is going to play out. And of course, I did update it one more time with this bad boy right here, just showing with the adaptive MA mean reversion to actually point out every time the mean reversion actually did succeed, at least the previous 10 times. Because, if I could just make one giant chart of all of Bitcoin's history, holy shit, maybe I should do that. Yeah, does anybody want to load up mean reversion MA and then just make one really, really long image, just drawing arrows for every single time the mean reversions I've completed? Because that would be really fun. Yeah, but people, there are a lot of salt in this. I would highly recommend you reconsider your trading. That one's one of my favorite. Let's see here. 100%, huh? Looks like you don't understand Bitcoin. Is this some kind of joke? Yeah, it is. The 100% part was a joke. So, yeah, this is a joke title as well. Right? I'm not actually going to take a tall glass of I told you so and drink from it. Although, if they did bottle that, I probably would send you guys a picture of it. But, actually, I could probably go to Starbucks and tell the barista my name is I told you so. And then I'll have the size is tall. And then I can drink from a tall glass if I told you so. Okay. Joke's over. Let's go back to Bitcoin. Karsten says, what time frames do I trade mostly? Ooh, that's a great question. And I have a pretentious answer for you, but it's accurate. Mass transcends time frames. The time frame I'm on doesn't matter because our mass readings will adjust themselves to match that period. Okay, think about this. If our longest overexpanded period is 50 on the 4-hour chart, it's going to be 200 on the 1-hour chart, right? And we can actually see this right here, right? And because lower resolutions, and there are only 32 periods, there are some limits to this, but right, our longest overexpanded period is between 60 and 70, right? So if we go down to the 1-hour chart, right, and we multiply 60 by 4, we get 240, right? And our longest overexpanded period here is 275, right? That's why I like to switch around the time frames to find the most accurate version. And then, of course, actually, you know what we can do? We can actually load up 3-day wave PM on a linear scale. This might break my computer, so bear with me. Okay. Oh, wow, this loaded up really fast. That's really convenient. Right, so down here, we can actually see this in much higher resolution with much higher lag, right? Here on the 4-hour chart, our longest overexpanded period is 313, right? If we go on the daily, that's going to be divided by 6. And you might be asking, well, what's 313 divided by 6? about 52. So if you look down here at this little bloom of mass, you'll notice that the longest overexpanded period down here is roughly 48, right? And if we go to the 1 hour chart, it's probably not going to represent the entire period of mass down here because it only goes up to 600, right? Because 313 times 4 is 1,252, and that's not going to show up on the 3D wave PM, right? But you get the point. So this strategy really transcends time frame. Although quad CCI strategy, the other part when we don't have good mass ratings for trend identification, that's when we'll start actually using quad CCI, and that's the best on the 4 hour chart. Dad, are you working on something new, upgrades, automation, maybe bots? You know, I've yet to find someone who wants to do it for free. I'm not going to pay someone to make a bot for me, right? However, I'd be happy to give someone the entire strategy if they want to take the time to actually program it. Yeah, I'll make that trade. One of my institutional investor friends pointed out Jubot. It's what he uses for BitMEX. If anybody wants to look through this API of Jubox, and it's actually server-sided, so you don't need to have TradingView open like AutoView does to actually have it run. But I do recommend looking at this guy over here, okay? Okay, well, let's actually go over the few final comments here, and then I'll be on my way. Let's pop over to Discord. Live stream questions. Okay, this is going to take me a bit. Probably not going to do all these today. Kind of running out of steam here. Okay, anybody who has multiple ones, I'm only going to do one of each. Multiple people have asked for XAU USD, so I'll do that for sure. We'll start out there. Ooh, a bull flag. What do you guys think of bull flags? Oh, I need to refresh the chart template. 1 second. Dad, do you practice meditation? I do. Yep. Usually at the top of mountains. Hold on. I'll show you where I meditated yesterday. Just give me 1 second. And recently added. Where did I put those? Premium chat channel? Cool. All right, so right up here on this mountaintop during the sunset, that was really nice. With all the scraggly dead trees, it was beautiful. And then if you take a little bit of a look to the left, this is what I was seeing from that location. So it was about 2,000 vertical feet on that hike. It was about 7 miles. It was getting dark, so I didn't get to complete the last mile for the summit, which kind of disappointed me. I started at 2 p.m., and it took me most of the day. Sunset's at 5:30 here, so. Yeah, but that was, I do meditate. It was a really beautiful hike yesterday. Jay Constant says, tomorrow my birthday, will it be a birthday dump? Actually, yeah, that's really reasonable. It might be a birthday dump, right? Because, honestly, with our 275 man, lateral trading can still be divided or defined down by the 200 weekly, 200 moving average again. So really, it is much more probable, at least in the next few days, where we're going to trade laterally, at least a little bit to the downside. And yeah, trend continuation would be implied if we did not break that MA there. But we'll see. I don't really know. I have quite a large position, and I don't know I'm going to take profit on it, to be honest. Right? Since now I'm right here, a 3% drop makes me $450. All right, it's just my BitMEX account because it's a pretty small position. However, if I actually do the full dump, well, for my entry was right here, right? So that there's $450 if we just do the mean reversion. And then the full dump is going to be closer to 1,000. That would be pretty nice. Right? If I, earn that $1,000, I'll probably put it all into marketing. But yeah, most of my funds are on Binance. Right? Just because altcoin trading is a little bit easier. So with my BitMEX account, the full dump would be nice, and I'll probably keep part of the position open for it. I might do partial take profit on the actual meme though. Chris says, my wife brought some chocolate strawberries home for Valentine's Day, and I forgot it was Valentine's Day. I might get a dog tomorrow. I might just go out and get an Australian Shepherd. That's really been on my mind recently, right? Because if I go hiking every day, actually having a dog with me would be very wholesome. All right, XAU USD. We actually did hit 30 viewers for the first time today, so an excellent benchmark. I'm very happy to have you all supporting me. And I'm very happy to support all of you, right? Great Day says, have you heard of Sadhguru's practices? No, I have not. You'll have to tell me about it. I mean, sure, this is an obvious trend. If you just want to imply trend continuation and wait for the CCI roll-up, as long as those mean reversion pivots are not crossed, this will treat you well. Right now, that mean reversion pivot's apparently the 70 band, so let's take a look at that. All right, okay. So we're directly on top of that, on top of the mean reversion pivot. We can get a really good short in the near future here, right? Because after we start getting a downward trend inside this band, we're going to get a really clean short entry to that MA, and let's see here. Ooh, yeah, that would be a huge position. So, very much do recommend taking a further look into this chart. I guess we can set some alerts to see if we go any lower. We can start setting. So, they've just kind of kept him since. I can do nav. 1 second. Okay, well, this is an obvious chart. High potential energy with no breakout, okay? So when you have this kind of scenario, I personally have the patience to bet on these kinds of trades where I buy in and just wait for the expansion, right? However, it's much better to actually wait for trend to begin. I guess we can set an alert, right? Because this next wave PM crosses that's going to come up, it's going to be huge, right? Because guess what kind of wave PM reading we had? Okay, right. Just memorize what this section of the wave PM looks like real quick, okay? Take a look at this. Remember this. Okay, and now I'm going to go to Bitcoin on the daily. You want to know where we saw something similar? Right here. Right, this same area. So we have this nice period of compression right here, and then it's actually the new expansion that will define trend. And this wave PM cross that we see here, I actually call that the FOMO signal. So we're gonna go back to nav, and we're actually going to set it up. Uh-oh. Chris Land says, was that 6K range distribution and then markdown or accumulation? I don't do Wyckoff analysis, man. That's not my niche. Sure, Wyckoff is good on a macro perspective, but yeah, really all I saw this was as the compression of long-term distributions and then re-expansion for a new definition of trend. We saw the same thing on a previous crash pattern. Okay, let's go back to nav real quick. So I can actually set that alert. And we're down to 15, so I'm going to cut this guy short here. I'll probably do like 2 more charts and I'll be on my way. But this was a fun live stream. It's been a pleasure, guys. So we need wave PM, band 1 oscillator crossing up, wave PM, band 3 oscillator. Perfect. Actually, hold on. FOMO into nav. There we go. Interesting question. Is VET a dead chart? compression's fine, dude. As soon as you get actual, well, yeah, I don't want to play with this. I mean, if you believe in lateral ranges, sure. Buy here, sell here. That's not really my style of trading. I think, actually, I need to check on the salt call from recently. Because I called salt a while back just to telling you to take this kind of trade. Right? Because I'm sure any Wyckoff analyst would have a lot of fun on this chart, but I don't believe it. I don't trust the meme lines. I'm gonna be honest, my dudes, structure really isn't all that important. As long as you can define expansion and compression, that's all you need. Okay, why is this so slow? Come on. Did my internet just go out? Test, 1, 2, 3. As long as you can define expansion and compression. No, we still have internet. Okay. This is weird. Might be a sign. Okay, there we go. Yeah, I don't really want to trade vet. If you want to try the lateral range kind of trading, go ahead. Just not my style. Let me check on salt real quick. I mean, really, it's just all compression. It's kind of tiresome. USD SEK, what are your thoughts? Let's check it out. Ooh, Forex.